Welcome to Market Tea Tuesday,
where the tea is always hot.
Happy Tuesday.
Get into it.
Get into it.
Happy Tuesday. Lots of reporting, some good, some not so good. So I'm glad if you are joining us that you're here and you will be getting all the tea on everything that's been.
And we've had a lot going on too. I think it's important to note, but all good things. I mean, listen, we've been asking for a buyer's market and it's here. So
it definitely is
let's
here.
revel in it. Because like we've always said, if rates come down, we're going to see those rates. We're going to see housing prices go up. And so it's a scale, right? And so we have to decide what the good is and what the bad is. So
yes. And I think one of the biggest indicators that the market is moving, and it's probably not moving as fast as we would like, is the inventory, right? Yeah. So there's definitely people are still moving. People are still having to sell, having to buy, all the things, but there are over 1 million active listings. Or there were in May of 2025, and that's well over, just a little bit over 30% year over year, which that is that's a large number if you think about it, right?
The good thing is that because there's so much inventory, you can find the perfect house because you can get what you want. You can get seller concessions. Like this is what we've been asking for. And so, and a lot of it you have to, I'll say it again, but especially in Florida, you have to look at the condo market. It's completely different. I actually wish it was separated because there's so many changes in condos, not only in Florida, but we're going to see it more across the board because if you see, there was an article the other day about one in South Carolina where everybody had to evacuate and move out of them because they're worried that it's going to collapse. So the condo market is a completely different thing. And that's something that we have to evaluate when we're looking at all these listings. But something more important to look at that tells like whether we're in recessionary times is looking at builder permits. So builders drive the market, whether we like them or not. Okay. And so we need them to do well because that drives the market. It shows like, who's buying, whatever. And the permits that were pulled in April were lower. And then, but in turn, because we have all this inventory, guess what that does? That drives rents down a little bit too, which is great because everything's so inflationary is the thing. Like, so we need to see these things come down for affordability. So we've been asking for affordability, but right now we're reacting in fear. So you've got to choose, like, are you going to react in fear or are you going to react in opportunity?
Right. And us being here in Florida, I think it's important to tell that Florida has seen a large increase in the inventory, right? Specifically Florida, there's about a 30%, like 30% of the inventory is within Florida and Texas. That's a lot.
Yeah.
That's a lot.
We also have a lot of people. So
we do.
You got to look at it in comparison. So we have the most land developed and so forth. So it's all about the perception that you look at it from. And so that's the good thing. But the tricky thing is that we need to also see jobs lost. So I always say the economy is like a rubber band. It can only pull back so far. You want to see a better market? Guess what? People have to lose their jobs to do that. Okay. And so that means, adding jobs, people getting laid off, because that's how you know that you're in recessionary times. And in order to bounce back, you have to be in recessionary times. Okay. But opportunity happens in recessionary times. So don't let these things give you any fear. We showed the chart before where most recessionary times, guess what they do? They drive rates down, but they do not drive values down that significantly. The only time that we saw that significantly was during 2006 to 2008. That was a different story. We had a lot of stated income loans, things like that. So just have to look at it from the perspective and stop looking at it from fear mongering.
Right.
What will people make their most money during these times?
That's true. I've heard that many times. Mm-hmm. What would you say is, since hurricane season's coming, right? What would you say are some of the major issues for buyers when insurance?
Yeah, it's just insurance, like making sure. But the thing is, the sellers know they have to fix the things now. At least we're not in COVID times where they didn't have to fix the things. They're like, whatever, figure it out.
Yeah, going back to your point, right? We're in a buyer's market. I think buyers have a leverage. They have the upper
Mhm.
hand here. They're able to negotiate certain things. And I mean, we're seeing it, right, with the contracts that we're getting and the negotiations happening behind the scenes between the agents and the clients, the
Mhm.
buyers, sellers, all the things. So, yeah, I think we've been saying it for a couple of weeks, right? Where it's, hey, this is a buyer's market. So everything
Mhm.
keeps indicating that. So that's a good thing. That's been consistent, I feel like, so far.
And we
Uh,
saw homeowner insurance premiums are up 38%
yeah.
since 2019. Like, we're worried about rates. These insurance rates are ridiculous.
Yeah, and I think a lot of people don't look at that or don't think of that, but that could also, you know, bring down your purchase power because if we have a high DTI and insurance, I mean, you have to have insurance. If you're financing a property, you have to have insurance. You can't bypass that, right?
Yeah.
Even if you're not going to escrow it, it still needs to get factored into your DTI. So when we see those premiums going up, that's going to push your purchase power down. So we
Yeah.
want to make sure that we're conscious of that as well, and that's something we want to make sure we keep an eye on.
Yeah, that's crazy. So, I mean, we just have to look at different factors, I think is the biggest thing. Like,
Mhm.
don't we always have bull and bear markets, right? Like
Right.
bum rush and then like, okay, setback. But those are the times that you have opportunity to make the most so much like money, invest, get things, for cheaper. We're not really seeing major foreclosures either, which is a great thing because people are able to
Right.
keep their houses. Because think about it. We have people that have $300,000 mortgages with $1,400 payments. Like they're going to figure out how to keep that because even with rents coming down, they're still higher than
Right.
$1,500.
Right. And something else that I want to make sure we know is that the median listing prices are also coming down year over year. So
Mhm.
it's going to vary by market, but that's also an indicator that affordability may be a little bit, there's some sort of indication that it's getting better, in that sense.
Yeah.
So again, it's a seesaw. It's like,
Yeah.
it's a big, I always think of these, anytime I get a file or, a scenario, it's like a big puzzle and we just have to kind of piece it together because,
Well, and somebody said something the other day that was really good is that, yes, were housing prices cheaper whenever in like the 60s and so forth when our parents were buying houses? Yes. The rates were very high though. And
Mhm.
also their salaries weren't that high. So if you think about the money they were making, like they were buying houses, like no matter what. So why are we so nervous to buy a house? Like you're gonna build equity and it may not be immediate. Like I don't COVID like brainwashed people thinking that they're gonna have 20% equity tomorrow. That's not gonna
No,
happen. But like over time, it's your highest grossing asset.
right. And
So
I think you've mentioned it a couple times, right? Where it's like, no, there's no savings account out there that's going to give you the return on that a property will, real estate
yeah,
will year over year.
especially if
So,
anybody owned prior to COVID, to be honest with you.
yeah.
So I think it's important to know. So just don't let the media like fear monger you. Like still, if you can afford it, buy. Like one of my clients said yesterday, she's like, "Oh, I'm not so concerned about the rate. Let me know what the payment is." That's exactly what everybody should be focusing on because if we can make the payment affordable right now, let's do that. And then we refinance later. And guess what? You're even in a better situation.
Right.
It's all about affordability.
Absolutely. Yes. And everyone's going to vary, right? Everyone's scenario is going to vary a little bit. So it's definitely important to have those conversations. And although some of the questions that we have to ask may not be the most comfortable, trust me, it's just to help you and make sure that we get you where you're comfortable at the end of the day.
Yeah.
What about inflation? Like I know that the trends are indicating that we're headed in the right direction, but what are
Yeah.
your takes on that?
I mean, we're going to see that 2%. Like they're going to drive it down if we saw that purchases like today the reports came out regarding like retail purchases and the sales purchases were down. Okay. And so that's what we want to see because again, we need to see a recession. If you want to see a healthier economy, you have to it's kind of like burning down a forest, right? And then you get the best growth after that. Like
Mhm.
it's in the moment it's like, oh my gosh, the whole forest just burnt down, right? But then the most beautiful luscious things grow, right?
Right.
So it's the same thing with the economy. So you just have to look at it like that and have that perspective. Um, Again, always make sure you have money saved for a rainy day, right? But it's a good thing that's happening. It's how it's how economics works.
Yep.
So we're definitely going to head to that 2% though on inflation for sure.
Yeah.
And then once we see that 2%, that's when we're going to start seeing rates coming down. But again, let's talk about prices, because when those rates come down, 1% equals 5 million buyers.
Yeah. And that's where you're going to start getting a little bit more. You're going to start, as a buyer, you're going to lose that leverage, right?
Yep.
You're not going to have that much negotiation power at that point, because we're going to get back into that multiple offers and all the things. So I feel like we always say this, but I don't think it's a problem to say it again. If you just want to go through your scenario and walk, just talk about it, see where you're at, see if now is a good time for you to kind of move forward, definitely reach out to us. We're more than open to having those conversations with you all.
Yeah, absolutely. We just want to make sure this is affordable for you and that you can get into a house if that's what is your goals at this time. So
yeah.
Right.
And something else that I want to make sure, since we're all here, Florida Hometown Heroes, I know last week or 2 weeks ago, there was a big release from Florida Housing saying, hey, I don't know why you guys are saying that Florida Hometown Heroes is going to be effective July 1st, because nothing had been signed, right? But as of right now, there are indications that we will be seeing it. So just if you have buyers that are waiting.
They did come out today and say $50 million was approved. So $50 million.
Oh, they did. Okay. So they did.
$50 million was approved. We don't have an exact release date yet. It most likely July 1st. We might have a few day delay because DeSantis does have to review everything and he has the right to veto anything. Okay. But most likely, and that 50 million is going to go like
fast.
This.
Yeah. So if you have buyers, or if you are a buyer, definitely reach out.
Well, and we can get seller concessions and maybe not even have to use it, because the percentage difference in the rate is like almost an entire % on every product.
Yeah, that's true.
So it's important to note that, because it may not be the best product for you, and it's never forgiven, which is a big thing. So make sure you're informed on the product, because a lot of people, loan officers, are not explaining it to them. And that is important to have that knowledge.
Absolutely. Yeah. And to Ashley's point, there's other programs that we do have that are forgivable and maybe a better option depending on the individual scenario. So definitely have a conversation if that's something that you're waiting on, or if your buyers have been waiting on Florida Hometown Heroes. Let's start exploring options now, so that if we do have to go that route with the Florida Hometown Hero loan, then we're ready to go July 1st. And even if the delay, you're already under contract, we're just waiting for it to.
And there are new income guidelines too. So it's important to have somebody who's knowledgeable on these things, because they're not every LO is made the same. So
yeah,
we want to make sure to advise you properly. And it's not just about getting you, we want to make sure we get you in a house to stay in a house.
Yes. And not be house poor.
Yes. Everybody wants to travel, right?
Yeah. But thank you everyone for joining us. I saw a couple people joining, and I am so excited because I love when we have, others on here with us. But if you would like to come on, and speak about what you're seeing in the market or how you're navigating some of the things, definitely let us know. We'd love to have you on here with us. We meet every Tuesday. So
yeah. Thank you.
I'll
see you next Tuesday.
Hot, but it's definitely getting hot.
All right. Have a good one.
All right. Bye.